Well, there's no other way to say it. Tariffs create all sorts of uncertainty, whether it's economic uncertainty or market uncertainty. And we've seen some of that reflected recently, not just in Canadian stocks, but in the U.S. markets, where the S&P 500 has declined in the neighborhood of 6% from its recent peak. Remember, there had been a Trump bump for the stock markets after the November election. Well, we've seen the benchmark in the U.S. getting back towards those levels we had seen in November. So are we gearing up for a stock market correction? Is it something worse? Our next guest has been studying the markets for decades and has lived through plenty of bull and bear markets. Ed Yardeni is the president of Yardeni Research, and it's great to have him back with us now.
Thank you.
Ed, nice to see you. First off, what do you make of the mood of the markets these days?
Confused. I mean, rightly so. We're getting just a slew of policy initiatives and changes in policies ever since the Trump administration has been in office. And so that's, as you said, led to a great deal of uncertainty. We don't know anything until, we hear the latest pronouncements from the administration. So, on Monday and Tuesday, the market sold off sharply, both here in the U.S. and in Canada, on news that 25% tariffs were going to be imposed. And then by Tuesday afternoon, Commerce Secretary Lutnick said, well, there might be a deal by Wednesday, the next day. And here we are. And now we're just waiting for the afternoon and, with bated breath. And it'll probably be some products that might get a waiver. But I don't think it's going to be a big grand deal that solves this conflict anytime soon.
Well, I want to talk a little bit more about lessons learned through market history itself. But before we do that, what do you think the game plan for the Commerce Secretary is? Because, yes, he talked about something coming later today to Bloomberg earlier this morning. But literally, we weren't even a day into Trump bringing down the hammer on tariffs. And he was already talking about, he's been in the markets for decades. He knows what the messaging's all about. What message is he trying to put out there?
Well, I don't know that he's got a solid message, because I think he's getting his marching orders from the president. And I think the president has demonstrated that he can change his mind, that, he doesn't believe in the art of the deal. But, it's always best, I think, when deals are done behind closed doors, so you don't see all the shouting and all the tension that eventually lead to a deal that both parties can live with. These deals are being worked out in public, so it's not very pretty, and it's having a deleterious impact on the financial markets in terms of volatility. And it's not even clear what the goal here is of the administration. Is it fentanyl? Is it immigration? That's a bit of a stretch, talking about the northern border being that big an issue in that regards. Is it to kind of level the playing field with tariffs, or is it to just incentivize companies to leave Canada and come to the United States? And I think that's a part of it, and I don't know that the president has made up his own mind of what's the key here that Canada needs to deliver. So Lutnick just kind of sits in his office and gets calls from Canadian policymakers saying, well, what if we give you this? What if we give you that? They said, I'll take it to the president. And then the president comes back and says, well, that's almost in the middle.
Okay. Well, that's helpful context on a situation that's hard to pinpoint on one particular direction. As someone who's studied a lot of markets over the years, the one thing I'm talking about you, not me, but I'm saying the one thing I have noticed is that we're getting deeper into this bull market. Based on history, there could be still several years of this bull market. We had not technically seen a correction in the market up until this point. And so we've gone a little bit longer than what you typically see in the markets with corrections. So I know it's tough, but how much of the trade uncertainty is people finding an excuse to sell a market that had really not had any slowdown?
I think we've seen some of that profit taken over the past couple of days, and there seemed to be what looked like capitulation selling. Bearishness sentiment indicators are up, showing quite a bit of bearishness. So that suggests, at least in the short term, we're making some sort of bottom here. But by the way, in addition to uncertainty about tariffs, we're about to get uncertainty about the budget resolution in the United States. Congress has to work out a budget, and that includes the president's big, beautiful bill, which will include everything that he wants to accomplish on the fiscal side. And whether that gets through or not is going to be another drama that plays out and creates some volatility for the market. Look, I thought since the beginning of the year that it would be a choppy beginning to the year, simply because this administration has a lot of ambitions, and some of the ambitions are clearly positive for the market, like things like deregulation and tax cuts, but other things like tariffs, not so much. And unfortunately, the bad stuff is hitting us before the good stuff.
And the reason I asked the question that way, Ed, is that, everybody was watching the ups and downs in the first Trump administration.
Yeah.
But if quite literally you had bought, like, I don't know, an ETF of the S&P 500 and, you looked at your performance since then, today, you're probably not disappointed. Do you think that if the markets remain volatile, if we even technically see a correction, would you be advising people to just get out of the stock market, or are you actually, do you feel it just makes sense to be ready for a wilder ride?
Well, history shows that the market and the U.S. economy have done well through thick and thin, just no matter who is in the White House, no matter what the composition is of the powers that be in Washington. I've observed that we should recognize that the U.S. economy has done well despite Washington, and the U.S. stock market has done well despite Washington. Every now and then, Washington's policies will create corrections and maybe bear markets. But I think, especially given the volatility, you have to be a long-term investor. You really have to hold on. And I would say this is an opportunity to take some profits in areas where you've done extremely well. And that's, the word rebalancing comes to mind here, that it's time to rebalance out of positions that maybe got a little bit too big because you made a lot of money there, and raise some cash for opportunities that we've had even like yesterday in some of the tech stocks.
Okay, so you're saying that sometimes it's good to take some profits, but even take a second fresh look at stocks that you had previously been in?
Yep. Absolutely. Or not in. I mean, the stocks that you kind of missed. I mean, a lot of people missed NVIDIA. I'm certainly no NVIDIA expert, but NVIDIA's cheaper. The Magnificent Seven are down 13% since the market peaked on February 19th. The S&P 500 is down 6%, as you said. So the Magnificent Seven are cheaper than they had been. And these are still great companies. So you might keep watching some of the Magnificent Seven, because you might have an opportunity to buy them at a level that might make sense for you.
What's complicated about a globally connected world, even if there are, some efforts to weaken some of those threads. I even think about the Canadian stock market, like plenty of uncertainty right now for Canada, but a lot of companies that make up the TSX that are actually more services-based than product-based. Plus, we have a pretty big materials subgroup, which is ruled by gold stocks, and you've got gold at an all-time high. I wanted to ask you, is it possible for dip buying in the S&P 500 to occur, while also investors building a case that in a time of uncertainty they need safe haven assets like gold? In other words, can gold climb and the S&P 500 climb?
Yeah, I mean, over the years that I've been in this business, I have not really done much on gold, because I'm an old-fashioned strategist. I like to have dividends, interest, coupon, and things like that. But I've actually been recommending gold ever since it rose above 2,000. It looked like a breakout on the charts. And then from the fundamental perspective, I don't really have to do a lot of work to figure out what's going on. Central banks are buying gold. And the reason they're buying it is ever since Russia invaded Ukraine and the U.S. froze Russian assets, central bankers, especially in countries that don't share our values, like Russia, like China, like Iran, like Venezuela, it makes sense for them to diversify and own more gold and fewer dollars in the event that they get into trouble with the U.S. and the U.S. tries to freeze their assets. By the way, I should also mention that these policies of the administration are having a positive impact and stimulating growth in Germany. The German government today announced a fiscal stimulus package, and China did the same thing, and they're focusing on the consumer, which is basically what we've been asking them to do for a very long time. So there's some good things going on a global basis.
All right. Helpful context there. Appreciate you connecting the dots as always, Ed.
Sure.
Thanks very much for your